Hi everyone, thanks for joining us for our second live webinar in our series designed and focusing on helping you manage your professional and personal lives through the COVID-19 pandemic. I'm Tim Bowring, I'm the New South Wales Regional Manager and the Head of Partnerships for BOQS. I joined BOQS in September last year after almost 20 years in the banking industry, predominantly focused in healthcare finance. I lead a team of very passionate relationship managers who many of you would know and have also been in the industry for 15, 20 years plus. In my other role as Head of Partnerships, I'm responsible for working with government, industry bodies, professional services, equipment suppliers in trying to partner and create better outcomes for you in the healthcare sector. I come from a long family of people in medicine. My grandfather was head of paediatric surgery at RPA. My other grandfather was a pathologist. Grandmothers were nurses. My mum was a nurse. Cousins who are doctors. Brother-in-law who's a paediatrician. So I understand your industries and particularly understand the struggles that you're going through now at the moment. BOQ Specialist is here to help more now than ever. You're out there on the front line. You're in the hospitals. You're in the surgeries. You're in the theatres, you're seeing these patients who are being impacted by the virus and who are the most vulnerable. In that regard, you guys are the canary in the coal mine. You've been the first to feel it, and as we hope and believe, you'll also be the first to trade out of it. There's some nice small signs of relaxation yesterday, particularly in regards to dentists moving from stage 3 restrictions down to stage 2 restrictions. Also some relaxation on elective surgery as well. So we're hoping those treatments can start to flow through and your businesses can start to ramp back up. Today we've got a small slide deck to go through, which will take probably about 15 minutes. And then at the end, we're going to have a Q&A session. I've got Dean Alter, who's our head of credit on the line. He's going to field your questions. You'll see at the bottom of your screen now, there'll be a Q&A button. At any time, you can click that button and lodge your question. I'd encourage you to do so when you think of it. So it's in there. We will do everything we can to get through those questions as much as possible. If there are any that we miss, we'll write to you afterwards and explain or answer your question. But as I said, we will try and get as many as possible. A little bit of new tech for BOQ Specialist here. We've introduced a QR scanning codes here on our slides. So if you use your phone and use your camera on your phone, you can take a picture of the QR code and it'll link you through to further information on that slide. Particularly when we get through to the cash flow Excel spreadsheet, that might be something of interest to you. If you take a picture of the QR code and register, we'll be able to send that to you after the presentation. It's easy. Literally pick up your phone, get your camera out, get it on the QR code and hit it, and that'll link you through. So in this session, we're going to cover off on, what is financial hardship and also what's the difference between financial hardship and the banking relief package, because there is a key differentiator. What is the eligibility criteria to apply for the banking relief package and how BOQ Specialists can support you through that application process. So what is financial hardship? So the Australian Banking Association defines financial hardship as when a person is willing and has the intention to repay, is unable to meet their repayments or existing financial obligations, and with formal hardship assistance, their financial situation can be restored. Now that is slightly different to the banking relief package, which has been created, in that under the banking relief package, your credit rating will not be impacted for asking financial support. So long as leading into the pandemic, your business was trading along fine and you meet the eligibility criteria, your credit history will not be impacted. Whereas under traditional financial hardship, potentially that could have impacts on your credit rating. So financial hardship can be a number of unforeseen circumstances, unexpected events in life, in income change or expenditure, employment status, emergency events, and we are seeing a number of common themes here as part of the pandemic. So over the past month, we've seen high levels of restrictions on treatments being able to be provided in hospitals, in day surgeries, private hospitals, in dental surgeries. This has resulted in practice owners potentially not being able to meet their monthly repayments. Most importantly, not being able to make wages. I know that's incredibly important. You've probably all got staff out there who all have families of their own, or many who would have families of their own, and being able to make staff wages is one of the most critical things. We have seen a number of practices also choosing to close for the safety of both their patients and their staff as well. For the dentists, we went to level 3 restrictions really quickly. We had a high number of relief package requests for dentists who were only able to perform emergency treatments or, had to literally shut their doors. General practice has been impacted. We found patients more reluctant to attend the GP surgery to see a doctor. But what has been a surprising development out of that is the rise of telehealth, which has been supported further by the government in relaxing the bulk billing restriction on telehealth. And I think that's probably brought telehealth forward a few years, and we'll potentially see a new industry start to develop out of this. Our specialists, a lot of elective surgeries were closed down. A number closed down their practices and went into the hospitals to help out, but that did see a big impact on their businesses. And then our vet customers have traded pretty well through this. I think that's probably a little bit of, most of us are working from home in the general public. That puts us closer to our animals. We're probably more in tune to the being unwell. And the vets very quickly moved to doing car park drop-offs for pets and pickups so they could be treated. And so our vet customers actually have traded quite well through the pandemic. So I just talk about what is the banking relief package. So the banking relief package was developed with the Australian Banking Association and its members, who are the banks and financiers. And these relief package measures are specific for the COVID-19 pandemic. So eligible customers on their home loans are able to defer their payments by 6 months with a 3-month check-in, and at the end of 3 months, if assistance is still required, deferred for another 3 months. And with business facilities, it's deferred for 6 months. Now, there's a number of ways it can be treated, which I'll go on to later. And when you apply for the banking relief package, it's really important that you talk to your relationship manager about which of those options you'd like to go for. Something we wanted to just cover quickly, our webinar next week will focus on government incentives and subsidies, and we'll go into these in more detail. But two of the key ones we feel for our customers are the JobKeeper subsidy and also the ability to negotiate rent. So under JobKeeper, this is for your staff, where the subsidy will be paid through you as employers to the employees up to $1,500 a fortnight. It's administered by the ATO and available for the next 6 months. The key eligibility criteria on the 1st of March, you're a trading business and you have either or are expecting to experience a 30% drop in revenue. The employee must be over 16 years of age and not receiving a conflicting government payment. In terms of rent negotiations, there's probably two sides to this coin for our clients. So on one side, we would have customers who are commercial property owners for investment, and they may find they have tenants wanting to negotiate rent reductions with them, and they can take advantage of the banking relief package to get some relief on those mortgage payments. And then for other customers your businesses, you may well be tenants in commercial properties, and obviously the ability to pay rent has been hindered by COVID-19. So the government has asked that tenants and commercial landlords enter into negotiations around rent. They've set a code of conduct for entering into these negotiations in good faith. They've committed that evictions are going to be put on hold for 6 months, and that also any rent reductions, be they waivers of rent or deferral of rent, should align with the fall in revenue experienced by the tenant. As I said, we'll go into these in more detail next week, but something that, if you haven't spoken to your accountant already, I'd highly encourage that you do. All right, so under the banking relief package, the eligibility criteria is very simple, basically that your business has been impacted by COVID-19, you have less than $10 million in business lending, your accounts were in order 90 days before making the hardship application, you're operating in Australia and have less than 20% foreign ownership, and if you are a commercial property owner with tenants, you make a self-declaration that you won't terminate leases or evict tenants based on non-payment of rent. We will have some customers who sit outside that, some customers with more than $10 million in business lending, or some where they may have been feeling some hardship effects prior to COVID-19. Those customers can still apply for hardship support. We just go through an approval process where we may require some extra information. Just to quickly recap on the relief measures we did talk about last week, I've spoken quickly about the deferred payments on the home loans and the commercial loans. We have last week launched the government-backed SME loan, where the government will guarantee 50% of a working capital facility up to $250,000. I will take you through the process for applying for that loan in a few slides. And we also have a number of fee waivers in regards to your one accounts and also terminal fees on request as well. So for any of those relief measures, please have a chat with your relationship manager, and they'll be able to take you through them. So I'll quickly talk through the application process of applying for the banking relief package. First and foremost, step one is to call your relationship manager. Every client of ours has a direct point of contact, either the details you'll have already, or on our website, we have a list of all our relationship managers with their contact details. So you're not going through a call center, you will go through directly to the right person. So you'll call them. And step two, the relationship manager will have a chat to you about how you want to structure your deferred payments. So the options with the deferred payments on commercial facilities is the deferred payments can either be recast over the remaining term of the loan. That'll work sometimes, although if there's only a short term left on the facility, it might find those payments are actually increased significantly. So to counteract that, the term can be extended by adding the deferred payments on to the end of the loan, or a balloon or residual can be increased at the end by the amount that's been deferred. With that option, I'd really suggest you speak with your accountant to ensure that's right for you. Obviously, having a higher balloon than what was proposed at the starter facility can have a number of impacts where it might just be better to extend the term and actually pay it off. Another option is you can switch from principal and interest payments now to interest only on variable rate facilities, and on home loans. With home loans, generally because you would have quite a long term left on the home loans, those payments that are deferred will be recast over the remaining period. You can also switch from principal and interest on home loans to interest only as well. And the third option to talk about is obviously that government-backed SME loan. So after you've spoken to your relationship manager, the application gets loaded, and what happens is we stop your payments immediately unless you specifically request us to let the payments continue on. The reason we stop them immediately is you can probably appreciate the number of hardship applications which have come in have been quite high. We're seeing a lot of clients out there who are really struggling. It has meant that the time for it to be processed is taking quite a while, and we're really conscious of your monthly cash flow, and so we run an auto stop on payments once a hardship application is lodged, just to make sure that money's not coming out of your account. If you do want us to take that next month's payment, as I said, just make sure your relationship manager knows and they can flag that. The next step after the application gets lodged, once it's formally approved, you will get an automatic email to notify you it's been approved. and then we will issue a letter to be sent to you with a summary of the proposed changes. Now, that letter's a one-way letter. You don't need to sign it and return it. If you're comfortable with the changes, you don't need to do anything. It'll all get changed in the background. If you're not comfortable with the changes proposed, you can contact your relationship manager and see how you could structure it differently. What we are seeing in the last 24 hours with the relaxation is some customers are saying, well, you know what, with these relaxations, I might not need the hardship or the banking relief package. So at that point, you can speak with your relationship manager and actually say, look, I don't need this anymore. Just to quickly take you through the government-backed SME guarantee loan, how to apply for it. So this is a government-backed facility for working capital up to $250,000. It works with our one account with overdraft. So clients with an existing one account with overdraft will just need to complete the COVID-19 scheme form and send it back in. We'll ask you to provide your FY19 financial statements and personal tax returns for all group entities, your BAS or management accounts up to 31st of December, 6 months worth of ATO portals up to the 31st of December showing no tax arrears, and also a cash flow projection template that we'll cover off in the next couple of slides. So if you don't have an existing one account with overdraft, there is another application form to sign which we can send you, which also partners with a COVID-19 attestation form, which basically just says, your business has been impacted by COVID-19. So when you request the SME guarantee loan, your relationship manager will have an email ready to send to you, which will have all the details of everything you need to do and complete. So for that loan, obviously we're starting to see quite a number of applications come through. It's really important that clients have a good understanding of how their business is tracking, and also have a think about how it's going to trade out through COVID-19. So what we've done is created a cash flow template that we can share with you, which will help you with your planning. And I'll just take you through it very briefly now. So you would receive this template. In the top left-hand corner, you would put in how much cash you've got on hand at the start of April, and then put in your monthly revenue as of 2019, so your previous year's revenue, and map that out through for the next 12 months. And what that is basically showing, your business operating at capacity it was operating at for the past year. What does that look like? And in the blue field below that is the forecast 2020 revenue percentage with the impact of COVID-19. In that field, all you're doing is entering a percentage of how much you think revenue has been impacted by COVID-19. So it's down 10%, put 10%. If it's down 50%, put 50%, and that will automatically adjust the forecast revenue for FY20. You also have there, if you've got any commercial tenants at all, rental income, you input the rental income, and then below that, your forecast rent reductions. So if you've got tenants who either stop paying rent, entirely, it might be 100%. Otherwise, you might have gone to the negotiation table and negotiated reduced rents. Out of the bottom of that, we'll split the total revenue for the coming months. Then staff wages below that, and another field where you can enter any support you're getting from the government in regards to JobKeeper. Right, so you enter FY19 wages through, and then any subsidies from the government in regards to JobKeeper. You go down, you have directors' wages, contractors, finance commitments is probably a pretty important one. Finance commitments in regards to BOQ Specialist, but also in regards to any other finances you have. And then on the next screen we go to, you'll see at the top there, banking relief packages. And here you're going to input the amount of monthly repayments that are being deferred under a banking relief package. Enter in the rest of those, sort of operating expense details. You get down to rent. your whole rent will go in there, and then below, if you're receiving rent relief from your landlord, put in what that amount of rent relief will be. Any other expenses, it'll show you what your total expenses are, what your forecast net profit is, and then down the bottom it'll show, what your cash flow is. So what you'll see on this example is there's a blue box with SME guarantee scheme. That's got 0 in it at the moment, and you would input a limit into that as to what you're going to apply for. But for this, where there is no limit in it, you can see, sort of in month 5 or month 6, you're hitting your peak working capital need of $47,000. And there or thereabouts, that's going to be your working capital need under the government facility. Look, I'd allow a buffer in there because we don't know what's coming in the next week, if the impacts are going to be greater. So allow yourself a little bit of headroom in that, but that number should guide exactly how much you're looking for under that facility. So that's a great tool. It's important now in the age of COVID to really understand what your cash flow position is, but also it's a great forecasting tool for all of our clients with their business. Cash is king. It's an old banking term, but that is right. Cash is what pays the bills at the end of the day, and the more of an understanding you have of that moving cash position, the better. So that's it in terms of the slide pack. I hope that's answered a number of queries you might have into, the difference between financial hardship and the banking relief package, how you can apply for it, what the eligibility criteria is, and maybe tidied up some, ideas around cash flow and how to plan for that. I'm going to hand over to Dean Alter, who's our head of credit, to kick off the Q&A. We have quite a bit of time left. We set the session for 45 minutes. I can see we're 20 minutes in. So please make sure you get your questions in, and we'll endeavour to answer as many as possible. Dean, I'll hand over to you.
Thanks, Tim. Can you hear me there?
Yep, got you.
Good afternoon. Great. Good afternoon, everyone, and thanks for joining us. I'm Dean Alter, Head of Credit at BOQ Specialist. I'll help facilitate the Q&A session with Tim. Just before we start, I just want to briefly reiterate some of what Tim has said. I've been in the BOQS business for over 10 years, and our business has been supporting healthcare professionals for over 30 years. And many of you have been our clients for many years. And I just want to acknowledge that for many of you current clients, you're currently facing some of, if not your biggest personal and professional challenges as a result of COVID-19 pandemic. And these are truly for all of us unprecedented times. I just reiterate that Tim's touched on this, but everyone's circumstances are different and everyone's practice is different. And that's partly why dealing with a smaller specialised lender like BOQS that understands your industry and understands your practice means that you're hopefully starting in a good position. And Tim has been through them, but we have a range of options available to support you, including obviously the banking package relief program and the SME loan that Tim went through today, some of the measures that you covered in the webinar last week, and obviously some of the government packages that will be covered in the next webinar as well. But please, the one message I'd say is if you need the financial support, please reach out to your BOQS banker. We know, because we deal with lots of medical professionals, dentists, specialists, vets and accountants all the time. And we see that some of them are really financially astute and understand what's happening in terms of the finances in their practice. A lot of you are really focused on your practices and your patients, and maybe aren't as focused on the financial aspects. Please reach out to your BOQS banker, particularly at a time like the COVID pandemic where you might need a bit of extra support. Or you can reach out to, say, your external accountant or someone, internal accountant, or someone who can help you with your finances. And I think one of the messages we've seen recently is that the clients that are getting through the situation are not only those that are fortunate enough to have had their practices still operating and haven't been shut down, but also those clients that are on top of their cash flow, understand the needs of their practice. They are proactive in terms of some of the measures Tim has spoken about, including contacting landlords or speaking to their tenants about rent relief. looking into and understanding with their accountant some of those banking packages available and the government schemes available, and really understanding in detail what is happening in terms of the cash position of their practice. And that's why that tool that Tim went through for cash flow projections and the SME scheme is so valuable. So please, if you need any support, reach out. I think, as Tim mentioned, there are some positive signs in the announcement yesterday around elective surgery, and restrictions on easing from level down to level 2 for dentists is a positive sign, but there are many of you that are still going to need some support. So Tim, let's get into the Q&A session. Just a reminder for everyone,
Sure.
If you do want to submit a question, quite a few questions have come through, please do so. You can see that there's a question icon on your screen. Tim, the first question has come in from Dualat. Will interest on commercial mortgage loans be accrued for 6 months as part of the relief package? If so, in what form? What sort of rate will that be, and how will that work?
Sure. Thanks, Dula. Great question. So yes, interest is accrued on the deferred payments. And if the deferred payments are carried over for 6 months, that is effectively an increase in the principal of your facility during that time, and interest is calculated on top of that. So your interest rate will still accrue at the same contract rate you have today, but there is a cost for having the deferred payments in place, which is the interest accruing on top of that extra principal.
Thanks, Tim. The next question is from Raj. If I take out an SME scheme loan, what happens after the 2-year term, and do I then have to repay the full balance?
Yeah, great question, Raj. So BOQ has taken a position with the SME guarantee loan that we will have 6 months with no repayments, and then 18 months of interest only, bringing it to a 2-year term. At the end of the 2 years, you'll speak with your relationship manager and work out what's a suitable structure for repaying that principal for your business. We have looked at other SME loans in the market, and we feel that some of them that require full repayment within a 3-year term could potentially have a large impact on your cash flow, having to make large principal reductions within that period. So, we are committed to supporting our customers in practice and making sure that, the repayment of that facility suits the cash flow of our customers and will be repaid in an appropriate amount of time.
Thanks, Tim. I'll just add there another point is that after the 2-year period, and Tim touched on this, there may be opportunities to revisit where the world is at, where your practice is at, whether you have equity available in other assets to secure that loan. And what we want to do is to make sure that we can design the appropriate structure for the product at the end of the 2-year term.
Great.
Tim, the next question is from Michael, a really good question here. If I take out the banking package relief, will it affect my credit rating?
Yeah, thanks, Michael. I touched on that a little bit earlier, and that's, obviously very front of mind for a number of our customers. They're probably a little bit reluctant to ask for support because they're concerned that it could impact their credit rating. So under the banking relief package, all customers who are eligible for the banking relief package under that criteria, your credit rating will not be impacted by requesting support.
Excellent. The next question, Tim, from Lauren is another good one. We've touched mainly on business loans. Can I get the 6-month relief on my non-business loans, including home loans and credit cards, and how does that process work?
Yeah, thanks, Lauren. Great question. So process is exactly the same. So you'll call your relationship manager at BOQ Specialist. It can either be the person who's looking after your home loans, if you have a specific home loan manager, or it can be your relationship manager who's looking after your commercial facilities as well. Either can take your call and speak with you about it. So with deferring the home loans, so under the banking relief package, you can defer your home loans for up to 6 months. And at the end of month 3, there'll be a check-in to see how you're going, and that can then be further extended to go for the full 6 months. That's also available on your other consumer facilities as well. If you have a credit card, if you have personal loans and so on, that's available on all of those consumer facilities.
Thanks, Tim. Great question from John. What paperwork, we touched on it, but what paperwork, if any, on application forms do I need to provide as part of the application for the banking package relief?
Yep. So thanks, John. For the banking relief package, there is no paperwork you need to provide. So long as you meet the eligibility criteria, it's just a phone call to your relationship manager or an email if email is easier. But the thing with email is we want to confirm how you'd like to have it structured. But after that phone conversation, they can submit the application, get it all underway. We'll stop your repayments, and then we will provide you with a letter just confirming the changes with the deferred payments. And if you're happy with that, everything's fine. It gets locked away. If you'd like to talk about it and structure it a bit differently, you just call your relationship manager and have a chat to them. But yeah, just confirming there's no paperwork to apply for that, so long as you meet that eligibility criteria. If you don't meet that eligibility criteria, we may request some additional information. It might be some financial statements or things like that. But the majority of our clients would be covered by the banking relief package.
Thanks, Tim. I'll just add to that, there is some paperwork involved, and Tim mentioned it for the SME government scheme loan, but not for that banking relief package. Tim, the next questions come through from George, another great question. If, and probably more relevant given the updates yesterday, if you get approved for financial relief on a number of BOQS loans, what do I do and what is the process if you decide not to take up the 6-month relief in the next few weeks, either on all of those or on some of those?
Yeah, great question, George. If you feel that you're going to be in that position where you want to change it, the first thing you should do is call your relationship manager, and they can have that changed on our end. If we've already stopped the repayments on those facilities and we pull that out of the approval process, we will work with you in regards to making up the payments that have been stopped. But it is possible to, pull individual contracts out and continue them as normal, while still getting the banking relief package on some contracts, or you can actually pull out of the banking relief package process entirely.
Thanks, that was a great question. Another really great question on the SME scheme from Simon. If I have multiple ABNs, can I apply for multiple loans if they are, for example, for my practice and then my personal ABN?
Dean, I might actually throw this one to you if that's all right.
Yeah, sure. It's a really great question. And I think, Simon, it's really about making sure that the purpose of these facilities is for specifically the expenses to bridge you during the COVID pandemic. So what I'll say is we are trying to provide multiple facilities, if that makes sense, to cover the expenses within that ABN. So what that means is whatever expenses you've got, for example, in your tax return under your personal ABN, a lot of our clients trade under their personal ABN as well as a practice entity separately. Take out a facility once you've completed the forecast for your amount that's appropriate based on the expenses that you need to cover within that ABN, and then look for another facility, a separate facility, if you're looking for covering expenses in a different ABN. You can take out multiple loans for different ABNs, but the intention is that you are covering expenses to bridge you under that specific ABN, as opposed to taking out one facility to cover your personal practice expenses, your business expenses, and say your expenses under a family trust under a different ABN. Great question there, actually, Simon. Just a reminder to keep sending in questions. The next one is from Paul. What if I have a payment arrangement in place with the ATO? Can I still apply for relief, and will that still be considered?
Hi, Paul. Yeah, thank you. Great question. So yes, if you have a payment plan in place with the ATO, so that you wouldn't meet the eligibility criteria of being in order. Well, actually, Dean, I might come to you on this, but my opinion would be that you may not qualify for eligibility criteria, and we would require some additional. Well, sorry, I'm probably flip-flopping on this one. Certainly in regards to the government-backed loan scheme, potentially that may impact your ability to take that out. In regards to the banking relief package, I'm not sure, Dean. I might flick to you on that one.
Thanks, Tim. In terms of the SME scheme, look, it is outside of the eligibility criteria, but we are trying to make sure that we can help as many of our clients as possible. So talk to your relationship manager about your specific circumstances. What I will say is we won't be able to help everyone. Unfortunately, we will have to make some decisions where it may not be in your best interest to take on further debt, and there may be other solutions to look at, like talking to your landlords for relief and exploring other options. But please, the best way to start is always to reach out to either your BOQ Specialist relationship manager or to your accountant or others and work through the different situations that you face, and we will explore what is the most appropriate solution for you. Tim, I think that's all the questions.
Okay, fantastic. Thank you, everyone, for your time. Thanks for joining us. Hopefully, we've been able to provide you with some additional information that helps you understand the banking relief package and the process in applying for the support, particularly in regards to the government-backed SME working capital loan. Hopefully the cash flow projection is something that you can take away and use that to help you plan in your practice. As I said, either hopefully QR for
Thanks, Tim. So thanks, everyone. That concludes the webinar. Thanks, everyone, for dialing in. And just a reminder, if you need anything, to reach out to your dedicated BOQS banker or finance specialist. And please, if you have any questions after the webinar, first point of call is to reach out to them. The next webinar on government subsidies will be held at 12:30 p.m. next Wednesday, the 29th. But look out for more details on our websites and obviously on LinkedIn and social media. And remember to use that QR code that we discussed earlier in the presentation. Thanks, everyone. Stay safe and have a good afternoon.
Thanks, everyone.